Right, since I tend to ramble when I make these videos, I'll make a shorter one as well. So just getting to the point, you can see the longer video on this channel that goes through things in more detail, but the purpose of this particular video is just to show you my results. So you can see here that these are the current trading bots that I still have running. And so my futures grid, which is at 100 times leverage, with a $100 investment, you can see has made about a 3,000% return, or $3,000. The current profit that's in the grid that's made is $48. The unrealized profit is $29.61. So if I close this grid, I'll basically pull out, pretty close to that $3,000 type mark. If I go to the next one, and that one's also been running for 53 days, so not a bad return. But Bitcoin has been doing particularly well, so it's been crazy returns. And if it ran at the same sort of rate over a year, it'd be looking at 21,000 type return. So that'd be quite interesting. Certainly if you had bigger amounts in play. And again, definitely don't recommend 100 times leverage. This is purely an experiment. It's money that I can lose. It's up to you, and it's just purely showing people out there how the different types of bots compare. And if it helps you learn anything, fantastic. But it's up to you to work out what you do with your own capital. Ethereum USDT. So again, just basically, instead of just having all BTC bots, I'd have this Ether one, and you can see here 147 type percent return over 480 days. So not a bad return, not a great return compared to what you can get with some of these others, but a good return nonetheless. You can see here that BTC USDT, because Bitcoin's gone up so aggressively, 190. The bot's currently sitting on 195% type return, which is excellent. So if I cashed out now, I'd keep most of that. And I do take profit every now and again, so I do release these profits, which reduces some of my numbers, but it still gives you an idea. Down here, Infinity Bot. And so the other thing to explain too is, like, when you set up and start running most of these bots, you get to put in a price range, and then based on the range, where you think the low is and where you want the high to be, to sort of run between, to where to set your grids. Once it goes past either of those two ranges, if it goes below the bottom range, certainly if it hits the liquidity, then you basically get stopped out, lose all your money. If it goes below, and if it goes above, then you get a message to say the grid has stopped running, and your only real thing you can do is to stop the grid and start take profit and start a new one. So it is important when you set these things up to look at where you think the range might be, depending on how long you want to buy and hold the particular asset for. So you'll see a bit more about that in a minute. So this one here, its current price is 3,800, so it's in the middle of my range. So that one will keep running for quite a while. BTC USDT, so 480 days. So I've got 195% profit out of BTC versus 150% out of Ethereum. Again, Bitcoin's just done crazy prices, crazy increase. Infinity Grid bot, so that's a bot where it doesn't have an upper limit, so it's got a lower limit but no upper limit, so it just keeps moving up. So that's 137% return, which again is good. BTC USDT Martingale bot, 35% return. Not a bot that I would use in the future. Just comparing these three, 480 days, 480 days, 480 days, and you can see the better return 480 days, 53 days. So my favorite thing at the moment is probably some sort of a leveraged grid. Not suggesting you do it, and certainly not suggesting you do it with any money that is important to you. They can go backwards, as you'll see here. So this is my history of my orders. So these are orders that I've closed. You can see it says manually closed. And the reason why I closed this one here is it ran out of range. So it went over that 60,000 US dollar mark. And so as a result, the grid basically was no longer, buying and selling. And so I shut it down and took profit. And so you can see here, the profit on that one was, a bit over 1,000% off my $100 off 100 days. So, great return. And that was a 50 times long. So, all that happens is the greater the leverage that you apply, the closer your liquidation price closer your liquidation price gets to your buy price. And so then what you might need to do is increase your dynamic margin. So I'll just explain that a little bit better because it is important to know. So see how here, like I've only got $100 investment, but I've got close to $1,900 as my dynamic margin. And all that thing there does is it simply reduces or it moves down my liquidity price. So when I first bought this, when I first put my $100 in, Bitcoin was at 42,000, and my liquidation would have been around about, I'm going to say 36 to 38,000. So it meant that I bought it when Bitcoin was 42. I would have been liquidated at, let's say, 38. And when I looked at the chart at the time, I thought, well, it could go down as low as 34. I'm pretty happy around 32. And so I just increased my dynamic margin there to just keep myself in the trade. And of course, you can lose all that. If it went down to 32,000, I'd lose my dynamic margin as well as my actual investment. So I pretend I'd be down $2,000 as opposed to down $100. So it is important you understand that dynamic margin is there to help lower your liquidation price. Anyway, if I ever say anything that doesn't make sense or that's is incorrect, let me know. I'm not a grid bot expert. I've experimented with just about every different grid bot I can, and this is just my observations, and I think it's correct, but you never know. It could be completely wrong, but I can look at the money in my bank account, and I seem to be heading in the right way at this stage. So 50 times long, 1,000% profit. 25 times long, 116% profit. And so you can see, such a significant difference. That one's been run, however, over 100 days. That one's only been run over 31 days. If it was run over 12 months at its current rate, this one would have returned around about, let's say, 4,800%. This one would have returned around 1,340% if it ran for 12 months. So leverage really does significantly help, as well as provide risk, but it does help. This one here was a 15 times leverage, 72% return, would have been 884% over a year. This one was a 50 times short. So my goal is to try and test all the different types of bots. So if I'm testing the long ones, and I also want to test the short ones. So I had a feeling that Bitcoin was more likely to go up, but I wanted to try a short grid, and so I would have looked at a pullback, or an area that I thought it was going to pull back, and I just put this on for the sake of trying this out. So it only ran for 10 days, $100 worth, and I had a stop loss, so I didn't lose my dynamic margin. I would have put a stop loss somewhere quite high up to make sure that I didn't eat into my capital that I provided to move my stop loss away, and that's important. I haven't touched on that in the longer video, but with any of these grid bots, you can put in take profits and you can put in stop losses. So it's worthwhile. Always protect your capital. That's the number one rule of trading: protect your capital. Right, 50 times short. So if I went 50 times short up here, 50 times short here, I don't know why it's different. What do I do? I don't know. This one ran for 10 days. This one ran for 8 days. So I think maybe this one failed. So I had a bash at this one. Again, both of them are profitable. So up 5%, up 9%. This one I cancelled. This one hit a stop loss. So I didn't lose money, but only because I had stops in, because I thought Bitcoin was going to go up. Grid trading. So here's a little interesting exercise. So ignore this one a little bit, but 23% of profit there, 24% if I'd left it running for a year. Well, that was a year, 361 days. So 30 grids, 1% profit per grid. BTC USD spot futures didn't do anything, 4% over a year, so waste of time. BTC, I think I probably stopped that one. Yeah, manually cancelled. BTC USD leverage grid. I don't know what the leverage was that was applied. 5 times leverage. So that was think of it like a spot grid, whereas the others are options or futures grids. So it's just a different type of bots. So see here, you've got futures bots and you've got spot bots. So the spot bots do allow you to do leverage. The futures bots also allow you to do leverage. The futures ones, in my opinion, are significantly better. I think these ones maybe let you do up to 15 times. But anyway, so you can see here, 71% type return would have been 160% over a year. That ran for roughly half a year. This one here, this is where I start trying to compare. See, I've got 0.09%. So this is all about the number of, is the amount of space between the grids. So I tried to have it running between, say, 0.01, I think it was 0.1, I can't remember exactly, but this one here's 0.1, but it might have been 0.1, 0.5, 1%, 2%, 5%, just to see what grid range, what width might have been the most profitable. And in my head, I think it's 1%, but and that's what a lot of people seem to write, that 1% is the most profitable type of area. But I've learned from my testing that, the higher the better. 5% was the one that did the best for the same period of time. So this is 98 days at 0.1, 33% profit. This one here is just a different grid trading one. This one here, so see, this is 0.5 days. So remember the 98 days. So 0.1 up here was 33% return. 0.5 was a 42% return. Same period of time. Same period of time, 1% was 45%. 2%, same period of time, was 48%. 5% was 61%. So that's interesting. So you can see here, same period of time, this one had a 5%, same price. So it's 25,000, 35,000, 25,000, 35,000, less grids. But this one here definitely outperformed the others, 61% versus doubled it, for everything else as being the same. This one returned, the bottom one at a 5% width, returned twice the amount of profit as the tighter one. So that was, a worthwhile learning exercise. Again, just these futures grids. So that's that 15 times long. So, 49% return, 214% return off my $50. That was a 25 times long futures grid. 100 times long. So this is interesting here. So I want to really point this out to be clear. You don't always make money. And so, again, I can't remember why I did this one. I think that I was just trying to open up. See this one that I've got running here. So this one here, it's 100 times long at $100, and I've made my, pretend 3,000% type return. These ones here were my first tries at it when I was learning. So what happened is down here, where are we? I didn't cover this in the longer video. But what happened here, say, this is, I think, where I was trying to learn how to get it to work. And you can see I had 100 times long, but I didn't have enough dynamic margins. So it hit my stop loss very quickly. So I got liquidated. So see, it says liquidated there. And so I only had $55 at risk with a dynamic margin of $21.50. So it meant that my liquidation price was probably very close to my buy price. So I got wiped out there. Same deal with this one, very similar. I probably didn't understand why I got, closed out so quickly. And so again, knocked out. So it sort of shows that I'm down 146%. But if you look, it's that $50 there plus my dynamic margin. So I basically lost my investment and my margin. And so that's the danger. So I lost both of those because I didn't have a stop. And again, I just wanted to let it run and see how I went. So this one here, you can see I lost 21.8%, but that's roughly $22. But you can see here that I had $200 in there. And so this one was a stop loss. So that's when I worked out that I should add stop losses to some of these. And so that one worked out quite well. Again, dynamic margin 228. I only lost 11%. That was a 10x long, 14%. But again, I had a stop loss. So this is where I was starting to learn to, different strategies as far as putting in more margin to protect my downside or to protect getting stopped out prematurely, as well as having automatic stop losses to make sure I don't get liquidated if I'm not watching it. And this one here, futures grid, up 40%. So it's interesting. So I like the idea that grid bots keep me in the trade. I like the idea that they're sitting there constantly buying and selling. I like the idea that I can apply leverage to them. I think they're interesting, but I'm fairly convinced that with all of these, I would have been better off buying and holding and applying leverage and applying the same amount of margin. So someone like I won't sort of mention these videos, but a different broker that just allows you to buy it and go long, and just hold it and go long, I think would probably give you a better return than these grid bots would. But let's hope that I get to 21,000 percent return. That'll be really good. I don't think it'll happen. I don't know what would happen if Bitcoin got to 100 grand. What my return would be, but again, I've only got $100 in it. But it's interesting. It's been a good experiment to learn how they work. I do think they're interesting. Anyway, I'm probably no shorter video than the other one, to be honest, but let's hope for the best. Marginally shorter. Anyway, my apologies. There was stuff in this one that I haven't covered in the other one. Get a bonus.